Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, as you can see on the screen, dollar slumps at Fed projects only one more rate hike this year. Gold edges higher after Fed signals pause in rate hikes. Gold prices edged higher on Thursday after the US Federal Reserve raised interest rates by an expected 25 basis points and signaled it was on the verge of pausing future hikes in view of recent turmoil in the financial sector. So, as Fed has indicated that there will be only one more rate hike, so as a result we could see a big drop on the chart of DXY, and as a result dollar also started flying right after FOMC. So this is the 4-hour chart of DXY, US dollar currency index. So as you can see that US dollar currency index broke the support of 102.50 and right now standing at 102.07. See, overall the standing of the chart is not very positive right now. Market sentiment has changed completely and the market is bearish right now. So if you are looking for support, then my dear friend, there is no support on the chart of DXY right now, and it looks like that in the coming days, DXY will be heading towards the level of 100. This is the next support on the chart of DXY. Okay, and there is also no guarantee that DXY will stop the downfall at 100 level. There's a possibility that it may continue the downturn because overall the sentiment of the market has changed right now. So what should be a trading strategy on the basis on the chart of DXY? Okay, so your trading strategy should be sell on rise. So whenever DXY will be going up, because right now you can see that DXY has fell considerably. So if DXY goes up, if DXY tries to recover, it does not signal a trend reversal. If DXY tries to recover, then there is a possibility that after hitting a resistance, after hitting a particular resistance, it will reverse again. Okay, so DXY is not positive right now, and let's have a look at the chart of gold then. Okay, so would you like to look at the chart of tall bond? So, yes, let me show you. So this is the chart of US government bonds. So bond market also fell sharply. You could see the size of the candles, massive candles here. So the most important thing that you need to focus on the chart of bond is that last time market broke the previous high. Next time, or when bond will be going down, you need to observe the next low here. Okay, the next low of US government bond will be very important. If it forms a higher low, okay, listen to me carefully. If it forms a higher low, then there's a possibility that the trend of the market will be towards the upside and the whole trend will change again. So the next low will be very important on the chart of US government bond. If market forms a higher low, then we may see a possible upside direction. In case it forms a lower low again, if it breaks the previous low, then you can consider that okay, the market sentiment is bearish, sellers are dominating, then yes, there is a possibility that bond will also be going down. So next low of US government bond will be very critical. Now gold. So to be honest, as of now, okay, we do not have any proper level on the chart of gold, because right after the news, market showed a big jump. Okay, you can see the size of the candle here. This is a 4-hour time frame. If I switch to a 1-hour time frame, you can just see the size of the candle. So right after the FOMC, market jumped. So as a result, we need to give some time to the market to settle down so that we can understand where we should be looking for the buy opportunities. See, right now I'm recording the video in the Asian session. In the Asian session, as you can clearly see that we do not have anything right now to consider as proper support for the market where we can look for buy position. If I take help of the Fibonacci also, okay, you can see that Fibonacci levels are also not working properly and the levels are far away. So this diagram of Fibonacci is not valid logically, and the moving averages are also not working properly. So we need to give some time to the market so that it can settle down and we can understand the next possible levels on the chart of gold. But one thing I can tell you, that in this market condition, when the market sentiment has changed and gold is bullish, so instead of looking for resistances, instead of looking for sell opportunities, you should mostly look for buy position or buying opportunities on the chart of gold right now, because the market sentiment is bullish right now. So as a result, it's better to be on the buy position. If you're already holding a buy position on the chart of gold, be on the trade, no need to exit. But if you are looking for fresh positions, then you should be looking for buy positions only, because of the ongoing market sentiment, the new market sentiment. And as I said, okay, right now we do not have any proper levels on the chart of gold right now, because the market has just shown a fresh move. So as a result, we need to give some time to the market. Okay, maybe by US session you will get to know some levels, but as of now in the Asian session, while I'm recording the video, okay, we do not have any proper level. Again, you can see this is the condition of the market here. Yes, if market comes to 1962 level, you may look for some buy position, but is this um, is this a confirmation that this diagram of Fibonacci is okay, legit? There is no confirmation. We need some time. Okay, we need some time. As of now, just you can say that if market comes down to this level of 1964-65 level, the previous low on the chart of 15 minutes, okay, you can consider this as a support. But apart from this level, we have got nothing. Give some time to the market, let the market settle, then we'll come to know about the next possible levels. As a trader, you don't need to trade on each and every session, each and every day. Sometimes you should wait and watch also. Okay, so give some time to your friends and family. Enjoy the day. Bye bye. Take care. Do not gamble. So if you're still watching the video, that means you love me a lot. Thank you so much. Okay, so let me show you the Forex sentiment meter. So here is our Forex sentiment meter, and here is our beloved gold. As you can see here, 61% retail traders are still on the sale side. Okay, where is the selling position? The average selling position 1862. Market is selling 1973. So it's a difference of 1100 pips. My dear friend, if you're on the sell position right now, then it's time. It's high time to come out and exit. Okay, once you'll see the market is going down for some correction, try to exit. Okay.